Hello and welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna, and I will be taking up all your stock related queries on the show today. Viewers, don't forget to call us on the numbers that are there on your screens. But before we proceed further with the show today, viewers, we are getting a breaking news. SEBI issues interim order in matter of Gensol Engineering. Bars Gensol promoters over fund diversion, falsification of records. For context, complaints regarding share price manipulation and fund diversion was received in June 2024. Charu, my reporter, joins in now with more details. Charu, this is a major development there. What are the details that you have?
So the market regulator, Securities and Exchange Board of India, has come out with an interim order in the case of Gensol. Now, what has happened? The regulator has asked Gensol and its promoter director as well as its CEO to not hold any key managerial positions in the company anymore, and no trading is allowed by these two individuals or in the scrip of Gensol either. The regulator has also asked for an appointment of an auditor to look into the financial books of the company. Apart from this, the regulator made several observations in its interim order. The order was passed by the SEBI whole-time member Ashwini Bhatia, who said that the company went through an exponential growth recently, as seen from websites like Screener.in even, and saw that the number of shareholders increased, the number of trading on the scrip also increased. And what happened here was that in March 2025, the credit rating agencies downgraded its rating to D, and when the regulator asked them, called upon them to basically explain what the issue was, they said that there are issues in the debt servicing services of the company, and there is some issue in them paying back on their loans. There are some default issues. So it went ahead, and the credit rating agencies also alleged that there was some falsification and fabrication, forgery basically, of documents made by them. They also showed documents about paying back their lenders, all of them apart from IREDA and PFC, and it was seen that the documents later submitted on behalf of these two entities were fabricated, and that is why regulator, after seeing all these alarming situations, has come out with an interim order for now.
Right, Charu. And also, we are joined by H.P. Ranina, lawyer, Supreme Court, on the show. H.P. Ranina, coming to you on this big breaking that is coming in, what are the immediate legal implications for the promoters in light of SEBI's order?
Well, obviously, the promoters have to fulfill the requirements, and they cannot enter into any contracts or do any business. It all depends on what the order states, but they will have to strictly comply with the order. And to that extent, certainly it will affect the business interests of the company. But from what you have just mentioned, I think it's a very serious issue which has been raised, because things like manipulation, diversion, or trying to suppress records or trying to fabricate records is a very serious issue. So apart from other aspects like under SEBI law, there can be other, action could be taken under different other laws, especially, for holding the promoters responsible in case they have defaulted, defrauded, or done something which is illegal. So other laws may also come into play.
Right. And also, when we were talking about the implications, so could the promoters face criminal charges, or will this remain a regulatory matter?
No, that's what I said. It will have criminal charges. There will be other issues involved that will be taken up in due course once SEBI finalizes its order. And that, of course, will go to the normal judicial process. That could take 2 or 3 years. But certainly criminal proceedings could be launched if it is found that documents have been fabricated.
All right. And also, what steps should investors take when a company faces regulatory scrutiny of this magnitude?
Well, obviously, investors will be wary. It is possible that there will be a sell-off. So we cannot say, but that's up to each investor. Of course, investors will be wary of putting in any more funds or investing in these companies. But even existing shareholders may try to, sell off, reduce their loss, because if they feel that the prices are going to come down, then definitely they'll try to sell off as soon as they can.
All right. I'm sorry, there was some connection problem there, but I have another question. I just wanted to know that how does SEBI's jurisdiction extend in a case like these, and also could these orders be challenged in court?
Well, of course, SEBI's jurisdiction is there because it's a listed company. Certainly, all listed companies come within the jurisdiction of SEBI. Whether it can be challenged, yes, of course, it can. They can go to the appellate tribunal, and that definitely is a issue which is there. Obviously, everybody will go in appeal, and from the appellate tribunal, it may go finally to the Supreme Court. But here is a question of fact: whether the documents were forged, fraudulent disclosures were made. Normally, courts will not interfere. They only interfere where there is an issue of law involved, interpretation of a law. But here, if a question of fact is there, then SEBI's, finding of fact will be upheld even by the higher courts. And if they've appointed auditor, as you have mentioned, who will go into great details, a forensic auditor, then that will be a question of fact, which cannot be set aside by an appellate court.
And also, are these precedents for similar, SEBI actions, and how were those cases actually resolved? If you could shed some light on that.
Well, as I said, this depends on the facts of each case. It's all a question of fact. If there has been a fraud, if there has been something which has been suppressed, if documents have been, not properly shown or they have been fabricated. So every case will depend on its facts, and there are no precedents in that respect. But all that I can say is that SEBI has been quite active in bringing to book any errant promoter, and in the past they have succeeded in several cases, depending on the facts of each case.
Sir, I'm Charu Singh from NDTV Profit. I am the reporter that covers SEBI and markets. I wanted to ask you that considering the agencies have also come out in mails and said that, the documents regarding paying them back and documents in relation to them, in association to them with Gensol, are fabricated and falsified, what other agencies or regulators could get involved in their probe towards Gensol? Who else, could come out with an investigation or could look into it further?
For example, if the tax department feels that this has resulted in a false claim being made or that income has not been fully accounted for, then certainly the income tax department could also make an investigation before taking any action. And of course, it's for the government to decide whether they want to go ahead for any type of fraudulent transaction. So these are issues which each authority will take, having regard to the facts of each case. But all that I would like to say is that before any action is taken, a proper investigation is necessary. And once the investigation comes out with the correct facts, then the law will take its own course.
Mr. Ranina, and also, the complaint was actually filed in June 2024. So does the timing, of the action reflect regulatory delays or due process?
I would say it shows that the regulator has taken adequate time to ensure that whatever complaint was filed has been gone into. And only when they have found that there is some truth in the complaint that they have taken the action. So a 9-month delay is quite common for making a proper investigation. And it only means that a thorough investigation has been made. And that is why it has taken them 9 months to actually take action.
Right. And also, how does actually, affect the credibility of Gensol's past financial disclosure also, because the company, when they're disclosing their financial, performances, and a news like this comes after, let's say, 9 months. So, it actually points questions at their credibility also. So on that front, what do you have to really say?
Well, they can go into past action and they can reopen past accounts. And also the statutory auditors of the company may be asked to explain as to why they did not disclose any irregularity which they could have detected in the course of a statutory audit which they conducted in the past. So again, I think the statutory auditors may be also brought into the picture and they will be asked to give the explanation. Especially if the forensic auditor now appointed by SEBI comes to a different view than what has been done by the statutory auditors.
Right, Mr. Reena, thank you so much for speaking to us and, shedding light and also clearing out our doubts there. And thank you so much, Charu, for bringing us the story. And viewers, with that, let's proceed further with our show. Today on the show, we are joined by Avinash Gorakshakar on the fundamentals and Rajesh Bhosle on the technicals. Welcome to the show, gentlemen. We were actually discussing a news actually broke out regarding Gensol. So I would like to take your view, Avinash, on this. After the SEBI's interim order, how do you see, as per the fundamental, if we talk about the performance of the company, how it's going to be performing or impacting the performance of the company?
Yeah, good evening. See, my guess is that, once the SEBI order has been passed and a forensic audit has been, initiated, I think the markets would obviously look at it as a big negative surprise. I think tomorrow the stock will open with a gap down. There is no doubt about it. But I think clearly now, once the forensic audit starts, I think people would like to know whether there was some collaboration with the company, with the, statutory auditors, as Mr. Anina mentioned. See, I think clearly, the markets would completely lose confidence on the numbers which have been presented by the promoters, because the authenticity of these numbers will be now under question mark. And I think this company has been growing very rapidly. I was just seeing the financials. They had a debt of almost 1,200 crores, on a net worth of 500 crores. They had made a very big QIP issue of 900 crores. And a lot of money was to come in from these QIP investors. So I think now that money is unlikely to come in very soon. They had also floated a three-wheeler, automobile car project, which is yet to get commissioned. So I think, now markets are going to be completely confused and panicky as to how the company is going to move forward. Because till the time this forensic audit is not complete, the market would obviously look at it as a kind of a big corporate governance issue, and credibility, to get it back will take a long time. So I think, it's better to just stay away from the stock. And I think investors who can luckily exit tomorrow, I think they should think that they are actually lucky, because tomorrow I think there will be a huge amount of sellers on this stock.
Right. Avinash, also, I was just coming to that only, what should the investors be doing? What should investors actually make out of this whole scenario? And also the stock split that has been put on hold, that is like a major, SEBI's order that has come through. So on that regard, like you suggested that, people should exit, the investors should exit the stock. But still, what else would you like to say? What's your comment on the same?
No, I think, see, the stock split was done primarily to ensure that the preferential issue was, done successfully. But now with the, split put on hold, I think the bigger issue is that funding was very important for this company, which was going to come via the preferential issue, initiated by the company. But now with funding completely stopped, my sense is that it's going to be a difficult time, because the company has got very large orders of almost more than 1,000 odd crores. But now to implement these orders, if they don't have liquidity, then I think it's going to be a big problem. I think the company could even, record some big losses, because till, December, things were pretty good. September, I think, was good. They had a reasonably good order book. Their operating cash flows was positive. But now with numbers itself being in the question mark, and with fraud and fake numbers being, put out, as SEBI report states, I think it's going to be better that, even at 130, which is the closing price of today, investors who can get out can at least, think of exiting and, book a small loss, rather than waiting for the stock to come down in double digits soon.
Right. Thank you so much for that view. And with that, viewers, now let's proceed further with the show. For our first query that is written to us from Bengaluru, Pramod is saying that he holds 50 shares of Polyplex Corporation at 1,500 apiece. And he's looking for a view on the same, but he hasn't mentioned the time horizon. He is sitting on a loss of over 14,000 is what I can see right now. So talking about the fundamentals of Polyplex Corporation, Avinash, are you positive on this company?
See, I think clearly, Polyplex is a very large polyester packaging player and operates not only a domestic facility, but has some facilities abroad also. I think clearly, with the rural and the domestic consumption, growing, they definitely would benefit once the consumption trend starts picking up, because FMCG is a large part of their customer basket. And most importantly, crude prices have come off, because I think one of their main raw materials is basically crude oil derivatives. And with crude prices ruling soft, my sense is that over the next, say, 1 or 2 quarters, if crude prices remain soft, then their raw material prices would definitely benefit them. And I think on the supply side also, there was a lot of oversupply in the market, which has now got corrected. It's now more or less on an equilibrium side. So I think if the investor can give it some more time, 1500 has been the price he purchased. The current price is about 1200 plus. So I think probably another year and a half, if he can hold on, one could expect better numbers for FY26. So I think it's a good business, a large player, but I think you need to give it some time for the risk reward to play off.
Right. And also, Rajesh, I'll come to you on the technical front of this. How is it faring on the charts?
Good evening. First of all, if we see the charts from the January, while the markets are making low, it's in a consolidation phase, but gradually making higher bottom. So if we see the recent swing low of around 1120, so that can be kept as a stop loss for the short term, and immediate resistance is placed around 1260. Once this 1260 is broken out, then we can see a consolidation breakout that can lead towards 1480 and 1500 levels. So as of now, can hold with the higher bottom as a stop loss at 1120.
All right. Thanks for that view, Rajesh. Now let's go across to the first caller on the show. Shrikant is joining us on the phone line from Hyderabad. Hi, Shrikant. Good evening.
Hello.
Yes. Please go ahead with the query, Shrikant.
Madam, mid cap and small cap, madam. IT and hospital stocks recommendations, madam. Long term with the 10 years, madam. 1 decade.
Okay, 1 decade. All right.
And madam, recycling the stocks recommendations, madam.
Yes. So,
please and request.
Yeah, IT sector stock recommendation for a decade. Am I correct, Shrikant?
Yes, madam.
Okay.
Small cap and mid cap, madam. Large cap, no.
All right. Avinash, I'll direct this question to you, since he's asking for some stock recommendation and he wants to invest for like a decade, and he has a corpus of 1 lakh rupees. So any recommendations you have in the mid and small cap space?
No, I think, see, from the hospitality space, the sector is definitely growing at a healthy clip. And I think, companies like Lemon Tree or Chalet Hotels or Sami Hotels, if he wants basically smaller hotel companies, these are definitely good bets if he can stay invested for the next, say, 2 years at least. I believe that not only the fourth quarter, but FY26 also should be a lot better. So, one can definitely use market corrections to enter these stocks, because today the market has jumped up quite significantly. But on the IT side, my sense is that, the smaller companies like KPIT, Persistent, typically, these could be the better companies, because the large caps, as we also perceive, companies like TCS presented a very typical fourth quarter. So I think, large cap would probably, struggle in terms of the growth and the alpha. But maybe something like a KPIT or a Persistent, he could look at accumulating these, if he's got at least a 2 to 3 year view. Giving a 10-year view is a little difficult, but at least over the next 2 to 3 years, I believe, whatever headwinds are there in the US, we could get some clarity over the next, say, 12, 18 months. Because once the US market improves, I think you could see a good bounce back in most of the IT companies.
Right. Thanks for that view, Avinash. And with that, let's go across to a caller joining us from Kolkata. Hi, Sanjay.
Yes, please. I want to find out, I want to buy a stock for 5 lakhs.
Okay.
So basically, I'm confused between RIL and HAL.
All right.
So I just want to know, get a fundamental view on which stock is looking more promising.
Okay. So Avinash, a lot of fundamental queries on the show today. What is your pick? Because he wants to invest 5 lakh rupees, but he's confused between RIL and HAL. If you had to pick one, so what would that be?
No, I think definitely HAL looks interesting, because, the kind of order book they've got, they have just recently got an order of almost 60,000 crores, for the Tejas aircraft. Plus, they already have a order book for other kind of aviation kind of, products worth about 40,000 crores. So I think over the next, say, 2 to 3 years, the company is well positioned. My sense is that, this stock, if you can get it around 4,000 odd rupees and can hold on for the next 2 years, because, these companies are very well researched. Unless you have the time frame, which is slightly longer term in mind, it's not easy to make money in a short cycle period. So basically, if we can invest for the next 2 years, then I think HAL definitely represents a better opportunity. Of course, Reliance has also come in at a very attractive level, but my sense is that there the value unlocking opportunity both for the retail, for the telecom business could take a slightly longer period of time. So HAL definitely looks interesting. I think you can add some more, but slowly. I think in this market, since most of the stocks have gone up, it's better to actually look at a small correction and then start accumulating.
Right. Thanks for that view. Now with that, let's go across to another caller joining us from Hyderabad. Hi, Bhaskar. Good evening.
Yeah, good evening.
Yes, how can we help you on the show today?
Yeah, I'm having 100 shares of KEC International.
Okay.
Brought at 750.
Okay.
I want technical and fundamental for long term.
All right. And when did you purchase these shares?
Some 1 month back.
Okay. So it's a recent purchase. And how long are you planning to hold?
Yeah, like 1 year.
1 year. All right. All right.
Yeah.
I'll get your query answered, Bhaskar. Firstly, I'd like to come to you, Avinash, on the fundamental aspect. How important is the recent acquisition of SA Towers and the expansion into international markets like the US and Brazil for KEC's global strategy?
So I think definitely it would add a lot of value and incremental upside, for the business. Already in the domestic market, they are leaders in the transmission tower business. And I think almost all the power ancillary companies are expected to do very strong business because the power generating sector as a whole is going through a rapid kind of expansion kind of, phenomenon. So my sense is that, KEC already sits on an order book of almost 4,500 crores. Their numbers have also been pretty decent. In fact, the fourth quarter for them also is going to be pretty solid and encouraging. And I think, this is one of those companies which is unlikely to be impacted significantly by the US tariffs. So, it's a largely domestic player, although they have a large amount of exports. But I don't think, US is going to be a major part of that export basket. And I think if you look at the international strategy, which obviously would play off after the next 12 to 15 months, one could definitely expect a fair value of 900 to 950 in the next 12 to 15 months. I think you need to, exercise a lot of patience and conviction here, but a very strong balance sheet, a very good order book, and I think a very scalable and a very steady business is what the positives are.
Thanks for that view. And Rajesh, coming to you on the technical aspect, it's currently trading at 711 and was up in trade today over 7%. So what do you have to say? What are the charts suggesting?
So in a short term, definitely we are positive on the stock. The stock is placed on the 200 weekly moving average and also on the last year swing low. So at current levels, we are seeing some reversal sign and possibly the stock can rebound towards 880 to 920. So in a short term, bias is positive with the immediate support placed around 630 to 640 levels.
Right. Thanks for that view. With that, we have a WhatsApp query written to us from Harjeet from Mohali. So he holds 100 shares of Voltas at 1,300 a piece and he's looking for a 1 year view on it. So, Avinash, talking about Voltas, are you positive on this company? Do you recommend our investors to invest in this company?
See, I think the longer term, potential for this company is quite promising because, this company is a market leader in air conditioners, refrigerators. And I think the brand, which is a part of the Tata Group, is a well-respected brand in the markets. But I think the stock has actually, gone up quite significantly. And numbers in the last couple of quarters have not been up to expectations. Although the fact remains that this year is expected to be a record year because looking at the kind of severe, heat, obviously, sales of air conditioners and refrigerators is going to go up. But I think somebody who wants to get in at a level of, say, 1100 or 1150, I think at the lower side, I think a better risk reward could come in. So I think those who have it can hold on. But incremental upside, at least for the next 6 to 12 months, looks a bit difficult unless earnings growth, is something which is more aggressive than expected.
Right. And Rajesh, do you have any short-term view on Voltas?
Yeah, I have the same view, no view at the current levels, but if it dips further towards 1200 to 1150, that levels looks lucrative and can be bought in a staggered manner on a dip.
All right, thanks for that view. Let's go across to another caller joining us from Bengaluru. Hi, Lekna.
Good evening.
Good evening. How can we help you on the show today?
I holding Adani Solar Energy.
Okay.
1 year back.
Yes.
Trading at almost 90,000 loss.
Right.
I add more or sell, ma'am?
Okay, so you bought it at 1,069 and currently it's trading at 887. So Rajesh, she's looking for a short-term view on it. Although the stock was up in trade today over 5%, but what suggestion do you have for Lekna there?
So today, entire Adani space were in a buzz, and in the short term, can expect further extension towards 1100 levels. So can have a short term positive bias somewhere around 790 to 780. There's a strong base formation, but on a longer time frame, we don't expect any major outperformance. So any bounce towards 1100 should be taken as an exit opportunity.
Thanks for that view. And just a quick disclaimer for our viewers, NDTV is a subsidiary of AMG Media Network and an Adani Group company. With that, viewers, we'll have to slip into a short break, but please keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
back. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. Along with me, we have our fundamental guests and technical guests, Avinash Gorakshakar and Rajesh Phosle. So we will be taking up all your stock-related queries, viewers. So please don't forget to call us. The numbers are flashing on your screens right now. And with that, we have a caller joining us from Hyderabad. Hi, Dilip. Good evening.
Hi, ma'am. Good evening.
Yes. How can we help you?
Currently, I'm holding Ganesha Ecosphere 795 shares.
Okay.
At 1595 price.
All right.
So I'm looking for long-term view, like 1 year at least.
A 1 year view on it. Okay. Avinash, how does Ganesha Ecosphere compare to its competitors in the recycling industry?
No, I think Ganesha Ecosphere is definitely a promising bet because, within the pet recycling industry, they are large market players. They've got a good marketing network. My sense is that, this stock has already been identified. And I think now, whenever a stock gets identified, the alpha creation takes a lot of time. So I think the level at which the stock, the investor has entered, provided the investor can remain invested for the next couple of years, I think you can definitely think of making good amount of money. Because this has been a stock where in the last 2 years, the stock has multiplied from a 3-digit to a 4-digit stock. So I think you'll have to wait for some time to get that alpha coming in. But yes, long-term prospects are good.
Long-term prospects of Ganesha Ecosphere are good is what Avinash is suggesting. And Rajesh, on the technical front, the stock was up again over 4% and is currently trading at 1614. So for a new investor who wants to invest in this company, are these the correct levels to enter?
So in the short term, we are seeing a flag and pole formation with higher bottom kind of structure. So with a stop loss of 1490 can be bought. The target would be the 200 moving average that is placed around 1800 levels.
All right. Thanks for that view. Now let's go across to a caller joining us from Hyderabad. Hi, Ravi. Good evening.
Yeah, hi. Very good evening.
Yes. How can we help you on the show today, Ravi?
Yeah, I have a query on Bajaj Housing Finance.
Okay.
So just want to know, does this stock has the potential to create wealth in the next 1 year?
In next 1 year. All right. So you're a long-term investor.
1 year, or I can hold for 1 year and 1.5.
Okay.
So I'm ready to buy around 1000 to 1500 shares. Or else, can the panel guys suggest some stock which has a potential to generate wealth in next 1 year or 1.5?
All right. Avinash, everybody wants to create wealth, in short term. But talking about Bajaj Housing Finance, it's currently trading at 124 and was up in trade today over 4%. So what do you have to say? Will this counter be able to generate wealth for our investor in the coming 1.5 year?
I think normally, it's difficult to quantify how wealth gets created. But I think Bajaj Housing is part of the Bajaj Group. And I think all of us are aware how wealth has been created in Bajaj Finance. So, Bajaj Finance has been one of the best wealth creators for investors. I think the story in Bajaj Housing could get replicated over the next, say, 2 to 3 years. I think 1 year is too short a period. And I think the investor should understand that, when the IPO came at 70 rupees, the amount of money which came in was almost close to 6 lakh crores. So, that was the kind of reception the company, the investors gave when the stock got listed. So I think, now since the stock has consolidated, the little bit of investor interest has gone up, gone down, at least from the trader kind of piece. I would suggest that, give a time frame of at least a couple of years. The business is going to grow with interest rates coming down. Housing finance companies are definitely going to benefit. And this is a core area which the government also wants to promote. So I would believe that 124 is definitely a very good attractive price, provided we have got at least a couple of years to stay invested.
Right, Avinash. Thanks for that view. We are joined by a caller from Bengaluru now. Hi, Vishwanath. Good evening. Vishwanath, are you there on the phone line?
Yes, madam. Hello,
Yes,
good evening, madam.
Yes, good evening. Please go ahead with your query.
I want to know whether is it the right time to buy the Pricol?
Okay. And why Pricol, if I may ask?
Recently, I saw some bulk deal happening, and also I'm it up. So I just want to check whether it's the right thing to do that.
All right. And if you can just pull up Pricol's charts so that we can see at what levels it is trading at. But till the time we get that, Avinash, I'll come to you. Are you tracking this counter? It is. Are you positive also on this company for like 1 year for our investors?
No, definitely. See, I think this company is a very large vendor to almost all the two-wheeler and the passenger car companies. They are basically, leaders in the dashboard segment. And Pricol is a very well-known brand. It has got a very large product base of several SKUs in their product basket. But I think, at these levels, the stock has moved up quite significantly. So I think, even if the investor does want to buy, he would probably chip in by buying 10% of what he is planning to buy and probably wait for a small minor correction. The stock definitely would be available at lower levels, not because the company will do badly, but I think in case the market corrects, and I think if you get a chance to buy this stock on declines, that would give a better risk reward because, when you're looking at the next 1 year, the stock has moved up significantly in the last 12 to 15 months. So definitely long-term prospects are good, but probably buy on decline would be a better strategy.
Right. And for that, Rajesh can actually help us, identifying the correct levels to enter Pricol. Rajesh, over to you.
The correct level should be somewhere around 400. We are seeing base formation, a multi-month low. Last year as well, 400 acted as a support, and in the last couple of months as well, 400 has been acting as a base. So any dip towards 400 can actually be a good buying opportunity.
Okay, thanks for that view, Rajesh. Now we are joined by a caller from Hyderabad. Hi, Krishna Mohan.
Yes, madam. I am Krishna Mohan.
Yes, how can we help you on the show today?
Jio Finance I am having.
Okay.
But I want a short-term view. I am having Jio Finance around 1,000 shares.
Okay.
But I need the amount by the month end. Now it is around 235 to 237, 238. My buying price is 249.
All right.
Whether I have to come out in this week before results or can I wait till month end?
Okay.
And what's the short-term view on Jio Finance? That's why I'm asking the analyst.
Yeah. Rajesh, he is sitting on a loss of over 10,000. He bought it at 249. Currently, it's trading at 238. Do you see any bounce back in the near term?
Yeah, so today the stock was in momentum and also we saw a range breakout. Previous resistance somewhere around 233, 34 has been broken. So we have a positive bias. Possibly the stock is headed towards the levels of 250. A trailing stop loss can be kept at 230, 228 to 230.
All right. Thanks for that view. And with that, we are joined by a caller joining us from Mysuru. Hi, Vishwas. Good evening.
Hi, ma'am. Good evening, ma'am.
Yes. How can we help you on the show today?
Ma'am, Motilal Oswal stock 150, average price 675. 3 month buy, ma'am. January month buy, ma'am.
Okay.
Short-term 9 month, ma'am. Profit loss, ma'am.
All right.
Voltas extra share buy, ma'am.
Okay. Rajesh, Vishwas holds 150 shares of Motilal Oswal. He's sitting on a loss of over 6,000. He bought it a month back. He's looking for a 9th month picture on it. So how are the charts faring for Motilal Oswal?
So today, if we say entire capital market related stocks were in buzz, and Motilal Oswal was also up by 4%. We expect this positive momentum can continue. 710 to 720 is a stiff resistance zone. That would be the ideal level where he can exit. In the near term, the stop loss can be kept at 580 levels.
Okay, thanks for that view, Rajesh. With that, we have a caller joining us from Andhra Pradesh. Hi, Mansingh. Good evening.
Hi, madam. Very good evening.
Yes, please go ahead with the query.
I'm holding IREDA shares, 300 shares, madam.
Okay.
Average price 180, madam.
Okay.
Today declare results. I want to add more. My investment horizon 2 to 3 years.
All right.
Today accumulate more.
Okay. Currently it's trading at currently it's trading at 166. And Avinash, coming to you, like we were referring to the Gensol news that just broke, at the start of our show. So Gensol has actually defaulted on loans from IREDA. So do you see any sort of impact on the fundamentals of, IREDA, and what's your outlook on this company altogether?
No, I think, see, frankly, when IREDA finances some of these projects, there is a security backup which is always there. So I don't think, they would be losing entirely on the kind of amount of money funded, because most of these solar projects are backed by the government. And obviously, I think these are projects where, money is given to these companies in a milestone kind of basis level. So I don't think it's going to create any negative surprise. Of course, we'll have to wait for the conference call commentary from IREDA management. But I think overall numbers have been slightly better than what the street expected. And I think, the markets would obviously look at what kind of disbursements IREDA would be making for the next financial year. So I think in the near term, yes, this will be an important issue to be known from a market point standpoint of view. But if the investor could look at the next 2 years plus, then I think a price of 165 to 166 is not a bad deal. The stock has corrected from almost 310 odd levels, and this is a very large, renewable energy financing player. So I think looking at the kind of growth opportunity, one can definitely look at buying a small quantity and take a slightly longer term view here.
All right, and also talking on the fund on the short term, Rajesh, how is it faring on the charts?
So I'm not aware of how the results were, but technically the prices have closed above 50 EMA after a long time. So we are seeing price and volume breakout. So as per that, as long today's bullish gap holds, that is around 156, the stock can extend move towards 185 to 200 levels. So positive bias as long prices hold 156 levels.
Okay. Thanks for that view. Now we are joined by a caller from Andhra Pradesh. Hi, Ramchandra. Good evening.
Good evening, madam.
Yes. How can we help you?
Can you say about Apollo Microsystems?
Mm-hmm.
I bought 1,500 shares at the rate of 113.
Okay.
I can hold for 1 year.
Okay.
Then the technicals or fundamentals of this company.
Right. And, Avinash, I'll come to you on this. Currently, it's trading at 117 and he has made some profits there. But, if we talk about its competitors, so what do you see? How do you see this company at par with its competitors?
No, I think, this is a small defense company. I think you can't compare it with a player like, say, Bharat Electronics or HAL. But I think within the given scenario, we are seeing that almost large and small and medium defense companies are sitting on a very decent order book. In fact, in case of Apollo Micro also, the December quarter was quite healthy. And I think the outlook shared by the company management for the next financial year was also equally encouraging. So I think, if the investor can give in some time, say around 12 to 15 months, I would not be surprised that, the defense market has now again started looking attractive. Whatever sell-off had to happen here has happened. And valuations have come quite, at reasonable levels. And at 117 rupees, he doesn't have anything to lose out. I would say that he needs to stay invested here for a slightly longer period of time to get a better risk reward here.
All right. Thanks for that view. And, we are getting a breaking news right now. IndusInd Bank actually has gotten its report from external agency identifying negative impact of 1,980 crore. And also, it has assessed the adverse impact of 2.27% to net worth on account of discrepancies. And bank will reflect the resultant impact in the financial statements for FY25. So that's a breaking coming in from IndusInd Bank. And Avinash, I'll come to you straight away. IndusInd Bank has been, the talk of the hour. Now, with this update, how do you see, it unfolding for the bank?
No, I think this is the second negative surprise. The earlier negative surprise was the kind of derivative loss of around 2,100 crores reported a few months back. And I think the business outlook also shared by IndusInd Bank was quite disappointing. So now I think the markets would obviously give it a big thumbs down. I won't be surprised tomorrow, the stock opens with a gap down, because clearly an amount of 1,900 crores again going into non-performing assets. And obviously this report coming at this point of time clearly indicates that the internals are weak. So I think, the stock could further correct significantly, although it's corrected, from a high of almost 1,100 rupees. I would say that this news is negative, and I think investors would obviously be a little wary now about the management commentary, because the management had clearly said that in the fourth quarter we'll be having a good profit. There's nothing to worry. But I think this number has now actually completely gone against what the management commentary was. So I think better to keep away. Tomorrow we could see a gap down tomorrow.
Yeah, tomorrow it's going to be, a stock to watch. And also, what should the investors actually, holding IndusInd Bank actually make of this development, Avinash?
No, I think, the management of the bank will have to answer a lot of questions from the analysts, from the bankers, from people who have invested heavily here. Because rightly, the balance sheet quality is something which was completely, strong a few quarters back. And now I think things have gone completely haywire. So I think clearly they will have a tough time to defend these questions. But I think what the market would like to know is there any further damage to be done? Because, after the 2,100 crore kind of derivative loss, this 1,900 crore loss, if it does fructify, as your report states, then I think it's going to be a very big negative surprise, because already 2% of its net worth has got eroded. This is another 2%. So I think this is definitely not good news. So I think, you'll have to wait and watch how the management reacts, but it's going to be a tough kind of period ahead for the bank.
Right. So not a good news for IndusInd Bank is what Avinash is suggesting. With that, we have a caller joining us from Kurnool. Hi, Yogesh. Good evening.
Hi, madam. Very good evening.
Yes. How can we help you on the show today, Yogesh?
I'm holding AGI Greenpac, madam.
Okay. I'm sorry. Can you come again, please?
AGI Greenpac.
AGI Greenpac.
Yes, ma'am.
Yes. Please go ahead. Yes.
I'm holding 56. Average price 783 rupees.
Okay.
Long term, madam.
All right. So, Avinash.
Should I add more?
Yeah.
Madam, should I add more number of stocks here?
Okay. I'll get your query answered, Yogesh. Avinash, is it advisable for Yogesh to actually add on AGI Greenpac shares? Are you positive on this company?
Yeah, we are positive on the company, and I think the investor needs to be invested in this stock, I think, slightly for a longer time period, because clearly this is one of those stocks which has rallied quite significantly over the last 12-15 months. And I think they operate in a very strong growing market, have a very strong product category. So I think, if we can hold on for the next, say, 12-18 months, I think definitely you could expect better numbers and obviously some further re-rating on the stock.
Right. Thanks for that view. Now with that, we have a caller joining us from Bengaluru. Hi, Mahadev. Good evening.
Good evening, madam.
Yes. How can we help you on the show today, Mahadev?
Madam, FMCG stocks and recycling battery stocks, mid cap and the small cap recommendations, madam.
Okay. And for how long?
5 years. 5 years.
5 years. Okay.
Okay, long term, madam.
Right.
5 years. Mid cap and small cap.
Understood. Avinash, Mahadev is a long-term investor and he has a corpus of 2 lakh rupees. He's looking for stock recommendations in the mid-cap and small-cap space in the recycling and pharma sector. So are you having any stock recommendations?
No, I think, the pharma sector is now looking definitely a little challenging, looking at the kind of news flows which have been coming from the US market. But I think longer term, I think, companies which are present both in the domestic market and the, export market, especially US market, I think you could look at companies like Sun Pharma or maybe a Lupin, which I think are large players. And I think, size obviously matters a lot in the pharma business. So that could be a good, opportunity. And as far as the recycling market is concerned, I think, we mentioned about Ganesha Ecosphere. I think if you can get the stock at slightly lower levels, he could definitely think of even investing here. It's a well-established business. And I think, obviously, I think, he's got to wait for a slight, longer time period if he puts money in these companies, because these are all well-established large cap names. I would say that, it's better to be a little safe and cautious in this segment, because small caps would obviously be a little more volatile. And the capital protection is always better in large caps.
Right. Thanks for that view, Avinash. And on the IndusInd Bank update, it has gotten a report from external agency. My reporter Subhana is joining us now with all the details. Subhana, what are you picking up?
So IndusInd Bank has informed exchanges that the external agency, which was reportedly PwC, has given its response back to the bank. They have submitted the report, and the report has identified the financial impact of 1,979 crores, owing to the accounting discrepancy, which actually comes up to about 2.27% of the bank's net worth as of December 31st. Now, let's go back earlier in March when the bank had informed exchanges about this. This is largely in line with what the bank's internal review had basically said. The MD and CEO Sumant Katpalia back then on March 10 had told that the bank has come across these gaps in the accounting in its accounting discrepancy, and that would be that would hit the bank's net worth of 2.35%. So PwC's and the external agency's findings is lower than what the bank had estimated. Largely in terms of the net worth, it's around 2,000 crores what the bank, what the external agency has said. And also the bank has also said that they are going to reflect onto the impact of this on their FY25 results. So this is largely what the bank has actually informed exchanges today.
Right, Subhana, thank you so much for giving us those details there. And we actually, discussed a few minutes back about the effects of, this breaking. Now, with that, let's proceed further with the show. We are joined by a caller from Chennai. Hi, Narendran.
Hi.
Good evening. How can we help you on the show today?
Good evening. Good evening. Thanks for taking up my query. See, my query is I hold 1,000 shares of Zen Technologies at an average price of 1,517.
Right.
So I would like to know the future prospect for this share for another 6 months. Will it be good to hold, or should I exit? If I should exit, what should be the best price to exit on this?
All right. Avinash, he is sitting on a loss of over 21,000. Currently trading at 1,495, but still, do you recommend him holding this counter for another 1 year? Do you see any positives coming?
I think he should hold on for the next at least 12 to 15 months, because Zen Technologies is one of the largest player in drone space. They have a very large order book, not only from the Indian defense market, but even some global customers. And I think the management commentary has been very reassuring. I think they've been saying that FY26 will be a significantly better year. Some more products are going to be launched. So I think, despite the fact that he's a little out of the money, currently, I think if he can hold on for the next 12 to 15 months, I think long-term growth prospects seem to be quite solid. So I think he should hold on. I think he should not panic, but expecting the stock to move up in the short term in the next 6 months is a little bit, kind of a blue sky kind of picture. So maybe 12 to 15 months is something which he'll have to hang on. And obviously, at that point of time, he could expect a better risk reward.
Right. And on the short term, Rajesh, are these the correct levels to enter for investors who want to invest in Zentech?
So fresh longs can be avoided. We have already seen stock rallying from the levels of 975 to current levels. So fresh longs can be avoided, but already holding longs can keep a stop loss somewhere around 1375. Higher bottom has been formed. On a bounce back, we expect stock to retest 200 DMA at 1700, and once it retests 1700, the trailing stop loss can be kept around the cost.
Right. Thanks for that view. Now let's go across to a caller joining us from Bengaluru. Hi, Rajesh. Good evening.
Hi. Good evening.
Yes. How can we help you?
25 shares of Cera Sanitaryware.
Okay.
And I'm looking for at 6,095 rupees.
All right.
And I'm looking for a long-term horizon.
Avinash, coming to you, it has dropped to 5,600 levels. He bought it at 6,000 levels and is sitting on a loss of over 10,000. But Cera Sanitary, this company, are you optimistic on this company?
See, I think this company has been a wealth creator, for a lot of investors, who entered at lower levels. And I think now the stock has entered a consolidated kind of range. So one has to understand that if one were to make money in this company, then it's going to be a compounder rather than a multi-bagger. So my sense is, yes, the business will continue to grow. They are market leaders in the sanitary ware market, and they have a very strong brand in the domestic market. You got investors like Vijay Kedia, who has a significant stake in this company from a very long time. And he continues to be positive and he's still holding on. So my sense is that, if you've got the next 2 years in mind, then I think you can definitely expect a decent risk reward. You could cover up your investment price and obviously make a decent amount of money here, but you need to take a longer term call.
All right. So on, Avinash is suggesting that on Cera Sanitary, you need to take a longer bet. You need to hold this company for long. That's when you can actually make profits. Now, with that, we have a caller joining us from Chennai. Hi, Chinu. Good evening.
Hello, good evening, madam.
Yes, how can we help you?
Madam, I have 1,000 shares of Trident, which I was purchased at 53.
Okay.
What I need to do? Can I book loss or can I wait for some 10 to 15 years?
You are holding 1,000 shares, am I correct?
Yes, ma'am.
Okay. So you bought it at 53. Currently, it's trading at 26. You are sitting on a significant loss. Avinash, again, I'll come to you since he's looking for a long-term view on the company and is sitting on a very significant loss of over 26,000. What recommendation do you have for Chinu?
No, I think, Trident is a very large player in the terry towel market, which actually gets exported to the US in a very large way. So I think, what has happened in the US post the tariff kind of issue, markets have been rattled. There have been some apprehensions that, the tariff could possibly be quite significant and that could put a spoke in the wheel. My sense is that, it's better to wait for a couple of quarters. I think we already have now seen that there's a 30-day pause from US, plus the fourth quarter numbers are going to come in. Overall, if the cotton, I think prices in the domestic market are reasonably priced. This company has got a very large following in markets like US and UK, especially for their terry towel export. So I think it's better to wait and watch there rather than, selling the stock at a loss. It's better to wait for a couple of quarters and then take a fresh review.
All right, so that's a wait and watch on Trident. If you're holding this company, so you can hold for 2 to 3 quarters is what Avinash is suggesting. And I'm afraid, Avinash and Rajesh, that we are running short of time. But thank you so much for your time and, asking our, solving our viewers' queries so patiently on the show. Thank you so much. And viewers, with that, it's a wrap on Ask Profit. But you keep sending in your queries. We'll cater to them in our next show. Till then, stay tuned and there's more lined up ahead for you all.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.